Hello Wolfpack, the situation has just gotten serious. As expected, we have lost the macro uptrending line. This pink line here has been an 11-year-long support and resistance zone for Bitcoin, stemming from 2011, right, all the way through to 2015 to 2018, and obviously now, back in June 2022, it acted as support, and we've lost it. We've lost it. That's a 9-year support and an 11-year line accumulatively lost. That's a big deal, guys. We're going to be getting into that today. We're going to be asking where Bitcoin's going. We're going to be talking about that macro line, whether it will be taken back, potentially, and we'll get into it now. So the weekly candle has come down. It's actually closed below that macro line pretty significantly, a pretty clear breakdown on Bitcoin. And this is what I was kind of referencing back in June. I said, hey, it's a very low chance, and even up here at around 25k, I said there's a very low chance that macro uptrending line support holds. Why did I say that? Well, I said that because of the time it was tested, and I also said that because of the structure of the macro line. Now, it was no doubt a major support zone, and we shouldn't have been overly bearish before it was lost, but that doesn't mean it wouldn't be lost, right? And essentially what happened is, I'm a big believer in the Q4 bottom, right? I think the bottom will be in Q4, and I think that because of various theories, one of which being the 4-year cycle theory. I'll show you that now in a second. So this is the 4-year cycle date range trend on Bitcoin. This is exclusive to my analysis. I haven't seen many other people do this in the same way that I've done it here. And we've been talking about this chart since November 2021. In fact, this is the chart we used to predict the top only about 6 or 7k down from the top. And this chart actually, if you're extrapolating the date range trend with various methods of calculation here, that takes too long to explain, but I can essentially show it to you. Essentially, using the amount of days from top to top, bottom to bottom, top to bottom, and bottom to top, we can extrapolate that and say that the bottom on Bitcoin will be in Q4 this year. Now, it's hard to be more precise than that. That's the rough estimate between November and December this year. And obviously June, when we bottomed out on that macro uptrending line, that's not Q4. And so I was very skeptical because if that was the bottom, we would have lost the entire 4-year cycle on Bitcoin, which I deemed to be stronger than this macro line, purely because of the fact that the 4-year cycle is not just concerned of the bottom like the macro line is, it's concerned with the tops as well, and it's also concerned with the halving. And so what we've seen now is that macro uptrending line being lost. Another reason why I said it was going to be lost, and another reason why it was going to be lost, is because a macro uptrending line is unsustainable, right? If we didn't lose it now in 2022, what would happen? Well, it would keep going upwards to the point where in the next bull market in 2025, when we go down for the bear market, it'd be at 160k, right? And at some point, it's unsustainable and you just can't hold it any longer. And it turns out that point was now. So what happens next? What happens with Bitcoin next now that we've lost that? Well, this is something, again, that I've stuck by for months, right? This is not a new opinion. What happens next is we come downwards and we retest the 17k bottom on Bitcoin. And this brings me into my first scenario, right? The best possible bottom in terms of highest price, the highest possible bottom Bitcoin can have, in my opinion, is the bottom that's already been at 17.5k. And the way we achieve that is we come down and we have a double bottom formation at 17.5k. We come down, we have that double bottom, and we lurk there until Q4. That would count as a Q4 bottom. And then we come back up and we do something like this, right? That is the best case scenario for Bitcoin. And I think it is relatively likely. Now, the concerning part about it is this, right? It's hard to say, if I think it's more likely. I would say it's more likely that we come down to 11.5k to 13.8k, which of course is this bear market resistance zone that might act as support during the bear market here. So I would say the most likely scenario, by maybe 70% margin, is going to be 11.5k to 13.8k. But it is very much worth considering that 17.5k will be a double bottom. Let's get into the reasons for that. Well, the first reason is double bottoms are typically how bottoms are formed in bear markets. That's the first reason, right? If you look at 2015, right, we had first bottom, we lurked around for a bit, came down, second bottom. 2018, first bottom, we lurked around, came down, second bottom during COVID. And even here during 2018, if you don't count COVID, we had a second bottom there. So I would say that double bottoms are basically the general way that markets bottom out. It's just a rounding out formation. So that's one piece of evidence. The second piece of evidence is that 17.5k obviously is a relatively strong support zone. It acted as support back in 2020, acted as support here in June, and it might act as support again. Not only is it a support zone by itself horizontally, we've also got the 300-week SMA moving up to it to reinforce it and barricade it for support. So regardless of whether 17.5k holds or not, I will be buying at 17.5k. I will be buying around 40 to 50% of my portfolio at 17.5k. In fact, I'll probably do it at 18k just to be safe. And I'm happy with that. I'm doing that even though I think we're going to go down further. I'm still doing that because, look, it's not like I've got a strong opinion on this. I don't know for sure, where we're going to bottom. I'm guessing it's going to be one of these two zones. So that's the first scenario, 17.5k. Second one, of course, is 11.5k to 13.8k. And that's a no-brainer. It's just a very strong support zone. I don't see Bitcoin going below that. If we do, I'd be very concerned with the actual state of Bitcoin itself in the cryptocurrency market. In fact, if we drop below 11.5k and we start digging deeper into Q1, where the 4-year cycle theory is invalidated as well, that's when I'd actually start getting very, very concerned with the actual life and the health of cryptocurrency in general. I'd be very concerned, actually. I don't think a single-digit Bitcoin is going to happen again. And if it does, I personally would probably be selling everything. I wouldn't be buying Bitcoin at that point. I think that's very, very dangerous. Because if you think about it, even in the logic that, hey, we typically drop 80% in a bear market, if we go down to 11.5k, that's an 83% drop. That's plenty, right? Going down lower than that, I don't think it would be interesting to say the least. We'd have to analyze it as it happens, of course, but I really don't think that'd be healthy for crypto. I think that'd be very bad. So yeah, 40% of my buying will be done at around 17.5k-ish, and then the rest will be done at around 11.5k to 13.8k. If we don't reach 11.5k to 13.8k, I would buy at a break to the upside. I don't know exactly what that level will be at this point in time. I haven't done the analysis yet. I will get back to you on that one soon. But essentially 40%, 17.5k, the rest either at 11.5k to 13.8k or a break to the upside. Again, I don't know what level that would be at this point. I'll do it soon. I'll find out soon. I haven't done the analysis yet. It is relatively difficult work finding out where the macro reversal point is. It takes a decent amount of analysis, and that's not really where I've been focusing my attention over the last few days. I've been focusing my attention on the macro line. I don't think that's necessary at this point to look at that too deeply. But yeah, and go back to the daily chart, for example, we've lost that support. Daily, of course, dropped down the bear flag formation. Best case scenario for Bitcoin, as I said, we can lurk around here for a bit, come resistance support, flip off the macro line, then come down later. We don't have to go down instantly. But what I can say is that if we get back above the macro line, if we close the weekly back above it, that's a pretty good sign, right? Because that means this was a fake out. But I personally don't think that's going to happen. And especially given the macro situation right now, macro is not really looking good at all. Oil prices have broken a descending wedge to the upside. They haven't really moved yet, but they've broken it to the upside nevertheless. So oil prices should be going up. Gas prices, whatever you call them in the US. And then we've got the S&P 500 still rejecting hard from that resistance zone, coming down to the nearest support. Now, it does have support just below it now, around 1% below it's got support. So we might see a little bounce, a little bit of, catching for support here. That's good to see, but generally speaking, it's not a very good structure. And then obviously bond yields are reaching new all-time highs again. And same thing with the DXY reaching new all-time highs again, which is indicative of negative macro development. It means that, hey, inflation probably hasn't topped out. That was probably a lie. Not a lie, but a misrepresentation. And rates still need to go up more, potentially by 75 basis points or even 100. So yeah. Look, I don't think this looks good. Macro's bad, Bitcoin's bad, short-term's bad, everything's bad right now. It's not looking good, and considering we have no real support until 17.5k, you can pretty much bet your bottom dollar that we're going down to 17.5k. And also, I will say as well, the month of September is going to be a rough month. Rough in the terms of insane volatility. We've got 3 major events. We've got CPI on the 13th, Ethereum merge on the 19th, and FOMC on the 22nd. It leads me to believe, since all those 3 events are happening within September, it leads me to believe that we could actually be seeing the bottom on Bitcoin, potentially in very late September rather than in Q4. But I'd consider Q4 and very late September the same thing. I've made it very clear that my date range analysis is not precise. It's very rough. So if we bottom out on the 24th of September, who am I to say, oh no, it's not Q4 yet, another 6 days until Q4, we need to wait? Like, that's ridiculous. Obviously, late September, given the events that are happening there, I think it's a possibility. Late September could actually be the bottom, Who knows? But yeah, essentially that's it for Bitcoin, guys. Just a little update there. Macro line support is lost. 9-year support, 11-year macro line, gone, right? Very interesting stuff. Thanks for watching. Hope you enjoyed. Watch these, shills that I'm going to plug in for a second for BitGet, Crypto Academy, and VIP if you're interested. Thanks. If you're interested in becoming a VIP member with the Wolves of Crypto YouTube channel, you can go to my YouTube homepage and you can click on the join button. This will open up a tab that shows you all of the perks you get for becoming a VIP. I'll quickly go through them now. There's 4 trading setups per week in spot and short positions, which is the main thing that people join for. Additionally, you've got prioritized reply to comments, meaning I will prioritize replying to your comments over people who are the free subscribers, the free channel members, because obviously as the channel grows, there's going to be more and more comments. I'm not going to be able to get back to all of them. And so the VIP members, I will prioritize getting back to first. We've got a 2-hour lecture on market psychology, which many people have said to me is the most valuable video I have made. And then we've also got exclusive Telegram group access, where you gain access to a Telegram group in which VIP members share charts and discuss trading strategies and ideas and the signals that I post into the VIP group as well. All of that is just 40 AUD a month, which works out to be around 28 USD a month. If you're looking for an exchange to use for cryptocurrency trading and you're sick of your current exchange, or you're just looking for a better exchange, I'd highly recommend you sign up to the BitGet exchange. There's many reasons for that. The first reason being it's non-KYC, which means it lines up with the fundamental values of cryptocurrency, decentralization on your end, which is perfect. It's also got 5 times lower fees than Binance, which is insanely cheap, which means you'll be saving a massive amount of money by trading on this exchange, which of course is one of your main intentions. On top of that, so it's 5 times less fees than Binance, it's decentralized, and on top of that, not your keys, not your crypto. That's not really a massive problem with this exchange because they've got a protection fund, which they've dedicated 6,000 Bitcoin and over $100 million into that protection fund in order to secure the funds of the users. Meaning, if something happens on the exchange and you lose your funds, it's not guaranteed, but there's a very good chance that you'll be able to recover those funds through use of the exchange's protection fund. And the last thing as well is if you sign up using my referral link, which by the way would support the channel, I'd highly recommend you do that, which you can find in the description below. If you sign up using my referral link, you can gain access to a reward center as well and gain access to over 4,000 USD in rewards by completing various tasks. So lastly, I'll just say it again, please sign up using my referral link. It takes 5 minutes and it helps out the channel a lot. Thanks guys. I'd also like to give a quick shout out to the Crypto Academy. This is a course developed by myself and Megaworld Crypto. We're teaching people how to trade. Become a trader, a 10-unit course is like the title, a 10-unit course that teaches people how to become traders. We teach people how to analyze charts. We teach people how to take profitable trades, how to master TA, whatever it may be. You can go on the website and you can read a bit about this, but ultimately I'll give you a quick rundown, 10 units, starting from fundamental cryptocurrency concepts, going through to technical analysis, going through to market patterns, indicators, candlestick formations, profitable mindsets and psychology, and then finally how to find trades. We've got about 450 slides, 80 videos, 8 worksheets, and a trading diary, which means we're targeting all of the core psychological groups of how to learn things, right? We've got visual learners, we've got verbal learners, we've got people who learn using practical skills like practice. We've got many different things there. We're targeting all those groups. We've also done an extensive market analysis on what TA courses are currently available. And we can tell you right now, for the price you're paying for this course, and in general, this is the most extensive course you will find that finds all of the information relevant to teach you how to trade, gives you lifetime access after a one-time payment. So if you're interested in finding out more about the course, go ahead and email cryptoacademycourses@gmail.com and we'll get back to you with all the relevant information. Thanks for watching. Hope you enjoyed, and I'll catch you in the next one. Bye.